Monday, traders. Look, I guess it's not probably going to be a happy Monday for the market. Look, this market at the moment is still obviously trading the fallout from the announcement of Trump's reciprocal aggressive tariffs that he announced last week. The end of trading US session on Friday was another bloodbath. So in the space of 2 days, Thursday and Friday, US equities, they lost about 5% each day, down 10% in the space of 2 days. The market over the weekend was hoping to get some sort of news, positive news, that Trump would actually delay the start of the reciprocal tariffs. They start on April the 9th, today's the 7th, so in 2 days' time. Hoping that there'd be some sort of positive headlines going into the open today. But Trump was out playing golf, so there was no headlines from Trump, and it was left to some of his senior advisors, and they actually came out and said that there would be no delay to or change in policy with respect to the reciprocal tariffs, and they would go ahead as planned. So that is not exactly what the market wanted to hear. Over social media on the weekend, especially X, where a lot of the traders talk all the time. There was a lot of doom and gloom, a lot of traders even talking about a 1987 style Black Monday, and that is when we saw equities down 20%. So the fact that we got no positive news over the weekend, and actually negative news as I just explained, we have seen a pretty ugly open here in Asian trading, where we've seen US futures, US equity futures, gapped down on the open, and then continue to sell off, and down at some stage around 5% again. So in the space of 3 days now, we've seen US equities down 15%. This is actually now starting to get out of control. It's actually worse 3-day fall than what we saw even during COVID. So we've got to go back as far as 1987 for a 3-day fall, what we're seeing at the moment. So a lot of blood out in the street. Now look, I know it's probably tempting to buy the dip, but let me suggest that look, these markets, certainly we don't know where the bottom is going to be. They can fall a lot further. The only reason and what will turn these markets around is some positive headlines from the US and from Trump, potentially delaying tariffs, or maybe that some deals have been made. We heard that so far at least 50 countries have actually contacted the US with respect to negotiations and trying to get some sort of deals done and to get some tariffs lower. So look, if moving forward we get some sort of some certainty or some sort of deals done, some positive headlines, that's probably the only time we're going to see any sort of meaningful base and some sort of maybe retracement from these markets. So again, look, there's very dangerous markets, even though they're down a long way. Buying a dip may not be the best strategy, and we've been safe for some time. These market updates, that we have moved into a new game as far as trade is concerned, and selling rallies is the preferred way forward for equity space. Anyway, a couple of key markets to watch. Crude's a key market to watch, most important commodity in the world. That also has joined the bloodbath. It was trading over $70 at some stage last week before all of this hit, and we're down towards $60 and trading a touch under. So look, crude doesn't like anything that's going on at the moment. Obviously, the tariffs, the trade wars, restricts global trade. We're also seeing economic growth get hit, and then also that R-word recession coming up. None of this is positive for crude. Crude certainly is a commodity that when it's volatile, and especially when it starts moving, it can do a lot of work. So I'd imagine the targets for crude now for the market are probably down towards $50 if this sell-off continues. So again, it's probably not another market you want to be buying the dip. Gold is a market that's obviously been a big market focus for some time, obviously because it's been doing a lot of record daily, weekly, monthly closes. But that is now over. We're seeing huge retracements in gold. The record highs are up there near 31.70, and now we are trading sub 3,000. So what's happening with gold is that when funds and traders are losing a lot of money on their equity book, they look to things where they're making money, and one of the places that they have made money certainly have been gold. So we're seeing a lot of gold selling on the back of traders basically trying to cover some of their losses in other markets with some of the profits on gold. So gold certainly at the moment is not a one-way bet. So again, another market that I'd certainly be careful about buying dips, and especially if equity markets continue to sell off. Another market obviously is very important is US bond markets. I'll be watching that closely. US 10-year yields, they closed at 4%. Look, if they have a sell-off below 4% on those 10 years, which I'd imagine that they will when they open, that is going to translate into potentially some US dollar selling. One of the currencies that benefits the most from lower yields and has highest beta to changes in US yields is the yen. We've got yen at the moment trading sub 140, or trading around 145, lows below 145. Look, this is one. Yen's also a safe haven currency. Seeing a big move in the yen is something that I would not discount. We've seen it before. When it moves, it can certainly move. Could it go down to 140? Look, those targets certainly are realistic. One of the trades that we've been talking about for some time is being long yen. It is working, and I'd imagine it would continue working. One of the other currency pairs, a big focus at the moment that is not benefiting from US dollar selling is the Aussie. It's in a world of hurt at the moment. It's up 4% last Friday, trading down around 60 cents. It is a risk currency, so when risk is offered, obviously Aussie is lower. It's a commodity currency. We're seeing commodities get smashed. Aussie lower. And it's also a China proxy. At the moment, China's in a world of hurt. They've got the biggest tariffs, biggest problem with the US with respect to this tariff policy. So it's a perfect storm for the Aussie at the moment. Market's pricing a lot of RBA rate cuts as well. So Aussie is something that I'd be watching. It has traded below 60 cents at the moment, but obviously if this all continues, scope for Aussie to go lower. So another market or a currency that certainly I wouldn't be looking at buying the dip yet. Could go a lot lower. Look, the key takeaway for all of this at the moment is that we are in very, very dangerous markets. We could obviously go a lot lower, if we've discussed, in a lot of different markets. Certainly need Trump to come out with some sort of positive headlines, whether it's a delay of tariffs or maybe that some trade deals have been made where they've reduced those tariffs. But until then, very dangerous market, so be careful. I would say that probably best strategy is either wait until the dust settles, or at least maybe lower your position sizes because we are trading in very wide ranges. Good luck. We'll catch back in with you again shortly.